Hey everyone, welcome back to Corporate Decoder, the place where we dig into the details that companies don't always want you to see. Today we're diving into some interesting moves at Sphere Entertainment. It's a bit like watching a magician try to escape a straitjacket, but instead of rabbits, we're dealing with debt and media rights. We're looking at a report filed in late April, so pretty recent. The main point is a deal to restructure some debt related to MSG Networks, which Sphere Entertainment owns. There are also some changes to how MSG Networks pays for the rights to broadcast Knicks and Rangers games. So what's the big picture? Sphere Entertainment, along with its subsidiary MSG Networks, is making some big changes to deal with MSG Networks' debt. They've reached an agreement with lenders and the Knicks and Rangers, which are owned by Madison Square Garden Sports. The goal is to restructure MSG Networks' debt and change the terms of the media rights agreements for the basketball and hockey teams. Here's a quick rundown of the key changes. First, Sphere Entertainment is putting $15 million into MSG Networks. Think of it as a quick cash injection to help things along. Second, they're replacing the existing debt with a new $21, changing how much MSG Networks pays to broadcast Knicks and Rangers games, and giving MSG Sports a potential stake in MSG Networks. That $15 million contribution from Sphere Entertainment to its subsidiary is a nice gesture, but in the grand scheme of things, it's like putting a band-aid on a much bigger wound. It's a fairly small amount relative to the overall debt they're dealing with. The new loan of $210 million is due in December of 2029. It requires MSG Networks to pay $10 million every quarter, plus almost all of the extra cash they make has to go towards paying off the loan. The interest rate is going to be SOFR plus 5%. SOFR is just a benchmark interest rate, and adding 5% means they'll be paying a good chunk in interest. Right away, at the closing of this new loan, MSG Networks has to pay the lenders $80 million in cash. Remember, the $15 million from Sphere Entertainment, well, it's included in that $80 million payment. Now, let's talk about the media rights. These are the agreements that let MSG Networks broadcast Knicks and Rangers games. The changes went into effect at the start of this year. For the Knicks, the annual fee that MSG Networks pays is being cut by 28%. Also, they are getting rid of the escalator, which automatically increased the fee each year. The contract now ends after the 2028-2029 season, but MSG Networks gets the first chance to renew it. For the Rangers, the annual fee is being reduced by 18%, and they are also ditching the escalator. Just like with the Knicks, the contract ends after the 2028-29 season, and MSG Networks gets the first shot at renewing. Here's a twist. MSG Networks is giving MSG Sports warrants that can be used to buy almost 20% of the equity in MSG Networks for basically nothing a penny. This could give MSG Sports more influence over MSG Networks in the future. Once the new loan is paid off, MSG Networks has to make annual payments to the lenders. These payments will be half of the extra cash they have on hand compared to a minimum cash balance that is defined in the term sheet until December 2029. The lenders can get up to $100 million this way. Finally, everyone involved is signing a mutual release agreement. This is basically a promise not to sue each other over anything related to this deal. It is important to note that Sphere Entertainment and its other subsidiaries aren't on the hook for this loan. Their assets aren't being used as collateral. All of these changes are supposed to be done by late June of 2025, but that date could be extended if everyone agrees. If you want to see all the nitty-gritty details, you can check out the full agreement attached to this report. Of course, there's a disclaimer here. This report contains forward-looking statements, which means that they are based on current expectations and could change. There are risks involved, like not getting the necessary approvals or unexpected costs. The company warns that actual results could be different from what they expect. You can find more information about these risks in Sphere Entertainment's filings with the SEC. So what does all of this mean? Sphere Entertainment is trying to stabilize MSG Networks by restructuring its debt and changing the terms of its media rights agreements. The $15 million of cash to pay off the new loan while dealing with lower payments from media rights. On one hand, reducing the payments for Knicks and Rangers games should help MSG Networks' bottom line. On the other hand, giving MSG Sports a potential stake in the company could lead to some interesting power dynamics down the road. The biggest risk is whether MSG Networks can actually pay off this loan. They have to hand over almost all of their extra cash, which doesn't leave much room for error. If they run into trouble, Sphere Entertainment might have to step in again. Overall, this deal is a mixed bag. It addresses some immediate problems, but it also creates new challenges. It's going to be interesting to see how it all plays out over the next few years. Thanks for watching. If you found this helpful, please like, subscribe, and leave a comment. Let me know what other corporate filings you'd like me to decode.